Hello traders, hello everyone, and welcome to our new video surfing the Elliott waves, where I'll look at some of the most interesting developments for this week. This video has been brought to you by Orbex. I'll look at the Euro, DAX, Ethereum, also a quick look at the Bitcoin, dollar, Chinese yuan, gold, and Kiwi. So firstly, let's take a look on the Euro. Market is still trapped in these big ranges here between January lows and this was, I believe, April highs. So since we are moving into this summer period, I think that maybe this consolidation will take a little bit longer before we will finally see a breakout. So we either are going to see a triangle here in a wave 4, or maybe this was already a completed flat for a wave 2. In either case, I think that after a pullback we can see more upside. So I think that Euro will stay in this bullish phase, and that sooner or later we will see a retest of 2023 highs. Now, if you look on the German DAX, we came nicely to the downside, and obviously one of the reasons is because the ECB is still very hawkish, and you know, if the interest rates are going higher, there is less money available to be invested into the stock market. So that's why we are seeing some more aggressive sell-off on European equities compared to the US markets, where we are still seeing quite steady uptrend. That may resume after all after this pullback, especially because Fed, as we know, is for now on hold, or maybe that's already a done deal from the Fed, and this hold will transform into the end of a hiking cycle. Okay, so we will see, but for now European markets are coming to the downside. What I see on German DAX is breaking this trend line support that is actually was in place since 2022. So I'm just wondering if maybe this 5-wave recovery is now coming to an end, that we'll see higher degree correction, or maybe we will see these levels. Let me hide these levels here hold as a support. Okay, so that's a very key level. So if as long as we are above that levels, I think there is still a chance actually that this market will either stay choppy or sideways, or even turn back to the upside. For a bearish continuation, we want to see aggressive sell-off below that level, probably towards 15,300 or so, before we may start looking even lower. Looking at the 4-hour chart, we see a very nice sell-off here. It's a very nice impulse. Now the question is if this is impulsive wave A of a free wave drop, or maybe is this impulse part of a flat correction in wave 4. What is a flat correction? Well, it occurs in the middle of a trend, in our case in the middle of an uptrend, where you have wave A made by 3 waves, wave B is a corrective lag that can move to a new high, and then you see sharp wave C to the downside, and then market resumes higher. So that's what I've been saying earlier, that this is going to be a very key support. Okay, as long as these supports will hold around 15,600, I think that there is actually a chance for a bounce here. But the only question is, will we get a 5-wave bounce, an impulse, or maybe will this be only a 3-wave recovery? In either case, I think that after a retest of these supports, 15,600, we can see rally minimum in 3 waves, possibly even back towards 16,000. Okay, so short term, I think that German DAX could come into very nice attractive support here, and then at least temporary bounce can be in the cards. But if this temporary bounce will unfold as a 5-wave movement, we will obviously turn back to bullish mode. If only in 3 waves, then we will continue to look for more weakness. Okay, so again, in the short term, I think the German DAX can come into very nice attractive support. Now let's take a look on dollar Chinese yuan. Now why I think this pair is important, because we know that in China they're doing everything to support their economy. Okay, they even lowered lending rates, but of course such actions requires a lot of time before we will see this economy doing better. However, speculators will try to always position themselves before this this will be visible through the economy cycles. Okay, so it's not a surprise to see our reversals down here in the last 24 hours because People Bank of China are still looking to support their economy. They are trying to defend current weakness of Chinese yuan versus the US dollar. There was also there are also some trade talks with New Zealand, so obviously Chinese yuan could get stronger, could come a little bit back here in the next few days, maybe even few weeks in my opinion. But from an Elliott wave perspective, clearly we are seeing a very nice free wave recovery for now that is testing 78.6%. So that's a very strong fib level, and I'm still thinking that we could see a sell-off here. The only question is if this will be impulsive one or just a temporary pullback. But whenever we will see this sell-off, I think that Aussie and Kiwi, which by the way are here, both are at the bottom, could see more upside. So Kiwi is in black, Aussie here is in orange. So I think that more upside here could be seen when this market will come to the downside. In fact, we are holding some very nice support despite dollar Chinese yuan trading to the upside. So if we will see stocks trying to stabilize, if we will see dollar Chinese yuan coming even lower here, and this, as you know, macroeconomic events, then this could be very positive signs for Aussie and Kiwi. Okay, so since I mentioned Aussie and Kiwi, I want to look at Kiwi. Actually, we have a very nice bullish pattern. That's a very strong impulsive rise and a counter trend movement that we've been tracking since start of the year, and we've been also highlighting this 61.8% as a potential important support. So far we have a very nice bounce, as I will show you in the next 4-hour chart. Clearly we can count 5 waves up. Okay, so this kind of recovery is very important whenever we define key support levels, because if now when we on a daily chart, when we define key support levels, we have confirmation from the market that something is going on. Okay, because not only that we have seen a rally, this rally can be counted in 5 waves, and always when you see a downtrending market being reversed with 5 waves, well, this is a first signal that something is changing, that bears can come to an end and that more upside could be seen. So not only that we had these 5 waves up, we also had a counter trend movement in 3 waves. Okay, so that's a very nice bullish pattern. We already are seeing once again some nice from these intraday key supports from around 6100, very close to that level. You have the 50 and 61.8%, a little bit lower. So I think that more upside here could be in the cards, especially if we can see a daily close above that upper trend line. Then I think that Kiwi could see much more strength going forward. Now let's take a look also on gold. Now gold longer term, we are bullish, but maybe just not straight away. Still this pullback is in play, and maybe this will stay in place unless we see a completed recovery here on the US yields. Of course, this has a lot to do with speculators and the Fed. So if the Fed is really going to stop the hiking cycle this year, that's when this market could come even lower, maybe 2024, maybe even some cuts, interest cuts could potentially turn this thing around, and that's when gold could potentially see much more upside. So now when we are at this stage, still not really clear what Fed is going to do, that's why we are seeing some pullbacks here. But of course, this also has a lot to do with Chinese yuan. Gold and Chinese yuan are in positive correlation, and for now, you know, Chinese yuan, yes, it's coming to the downside a bit for the last 24 hours, but generally speaking, it's still very weak. So that's another reason why gold is coming lower as well. But looking at the 4-hour time frame here, we have these 5 waves down. Okay, right now going on, still searching for some support. 1900 is a key support level in my opinion. We already have some divergence here, and what's probably the most important here is that I can count 5 waves down. Okay, and this latest 5th wave is even forming potential wedge. That's one thing, because we know that wedge suggests that bears are losing momentum, losing strength. So this overlapping price action suggests that sooner or later we will see market turning around and completing this leg. Then you also had this triangle before this wedge played out. So this triangle, as you know, it's a continuation pattern, but normally when triangle will cause a new leg, this will then be a final leg within a higher degree structure. Okay, so triangles can occur in a wave 4, it cannot not occur in a wave 2. So that's why I think that, since we know that markets in Elliott wave terms moves in 5 waves, so if that was a wave 4, then we know that this is a 5th wave. Also, whenever you have extended wave 3, keep an eye on this Fibonacci equality measurement of wave 1 compared to the 5th wave, measured from end of a wave 4. So this also comes in around 1900. Okay, so I think it's a pretty interesting level here. The only question is if we'll see later on 5 wave rise or only again 3 wave rise, and we will turn back to even lower prices. But no matter how I look at it, I think that interesting support here around 1900 could potentially attract new buyers that will try to lift price at least temporary here for this recovery. Okay, so I think that gold here could be potentially coming to an end of this current bearish structure that I'm tracking since May highs. Okay, now finally let's take a look on cryptos. So we covered a few times cryptos in the past, and it looks like that this analysis is now playing out very well. We are seeing a very nice response, very nice bounce from this lower trend line support. After these 3 waves down, we also see a broken trend line resistance. So more upside here, in my opinion, can be in the cards. But the only question is if maybe this correction will take time a little bit longer before it will really complete and send this market back towards these highs. Because notice that everyone, as you know, is watching Bitcoin, and Bitcoin because it's much more attractive compared to others, because this new spot ETF, because as you know, Security Exchange Commissions listed some of 46 cryptocurrencies which are not allowed to be traded in the US, that some brokers are offering. So of course a lot of transfers has happened from altcoins into Bitcoin, because Bitcoin is not on that list. Okay, so we are seeing a very nice move to the upside. We already are seeing a complete erase of those losses from April highs. So since we have this potentially 5 waves up here, that's why I'm saying that maybe this correction that we will see in the near future could take a little bit longer before we may see a next leg higher. Okay, because clearly the easy trend, easy money, very sharp move is now behind of us. So I think that whenever you want to ride the next leg, maybe just wait a little bit longer for corrections to show up. Okay, and that's why maybe Ethereum, even if it's lagging a bit, could also see some kind of a correction before market will see more gains. But everything is also linked to the US dollar. As you know what they say, if you have dollar right, you have everything right. So if dollar will really start resuming this downward trend, that's when cryptos again could see more gains. So I think that generally speaking, because the Fed is probably coming to the end of this hiking cycle, it means that speculators will look for more weakness on the US dollar, and this could be, generally speaking, supportive for cryptos, for stocks and other assets. Okay, traders, thank you very much for your attention. I hope that you enjoyed this video, and I will give you an update very soon. Bye.